In this video, we're going to look at a case study of some trades that I took last week. I have a free mini trading course which you should check out. There's been over 4,000 people go through this now, and I've heard very many good things. Now, it's totally free, so it doesn't take too much of your time, doesn't take any of your money. It's worth checking out. It might help you to turn your trading around if you are struggling to win. The link is in the description for that, so head over to that after you've watched this video. And by the way, there's also 1 day left of my sale, which is ending tomorrow. So if you want to get involved in that, head over there as well. Let's get into the video. Hello everyone and welcome back to the channel. I hope you're doing well. Hope you've had a profitable few weeks while I've been away. Now, I haven't posted on YouTube in about 3 weeks now. I was holidaying in Italy and I've been settling into my new home. Ignore the bland office. I'm going to spruce this up a little bit so it'll be a bit more enjoyable in future videos. But for now, I just wanted to go over the trading week that I just had. Now, the trading week I just had was pretty slow. I took one trade on Tuesday, I believe it was, and that was GBP USD. That got closed at break even. And from there, I didn't take any trades until Friday when I traded the US30 in the London session. Now, these US30 trades are what I'm going to go over today. You can actually see these up on the chart. And I'm going to break these 2 trades down and show you kind of a look into my trading approach here and show you that trading doesn't have to be too difficult. And that if you understand what you're looking for and what you're doing, you can actually get good results from just a small amount of work and even from just one trading day in the week. So digging into the US30 chart then, these are the trades that I took. As you can see from the callouts, I closed this trade at 3.7R, and then this one I actually closed just below break even. So that was around this point here. I got out of that prior to the NFP. Now, these are very simple trades, right? You can see that, we're not looking for a huge risk reward. We are just looking for a simple, achievable, realistic movements in line with the market. Now, let me break these trades down. So I'm going to clear this off real quick, and I'm going to zoom out to the larger picture. Basically, when my trades came around, we were trading at around this level here. What I'd seen on the US30 was a push down below this range here. Then we broke up, we had a break of structure, like so. And then we'd actually pushed even higher and made another break of structure like this. So if we pair what we can see here, we can see that around this area, we had this kind of whole area of relative equal lows, like so. Then we had a sweep below. Then after the sweep, we had a big, strong bullish push, which broke structure here, pulled it down, retested this demand, and then started to push away, breaking structure again. So I saw this as liquidation. We have liquidity here. This is the liquidation, kind of a spring if you look at it from a Wyckoff kind of point of view. And then after the spring, we had a push and a break of structure. So it showed me perhaps what we've done here is liquidate the lows, push up, break structure, and now we are ready to actually continue buying a little bit higher. So my initial plans for US30 for this day were actually the buys. I wanted to buy this thing up, and I was looking to buy from anywhere in this kind of region here, all the way towards these supply points up here to fill this kind of imbalanced price area that we had leading into that. So this was initially my plan for the day. I wanted to see a pull down like so, trade into here, and then a push up towards this supply where I would then potentially look for shorts or see what the market was getting up to. So that was the plan initially, but in the end, I actually traded it the other way. And the reason for that was the NFP, the news that comes out on Fridays, the first Friday of each month, breaking down the non-farm payrolls, which is basically how many new jobs came in the US. So I get out prior to the NFP. I never ever trade the NFP. It's too dangerous, too risky. Kind of feels like a gamble to me. So I ended up not being able to get those buys on, and rightfully so, because the NFP sent things crazy, as you're going to see. But basically, the first trade here was a sell. And the reason I went for a sell here was I'd been eyeing this up all morning. I saw that, okay, we had this extension. We can see here that we had open imbalance. So we can kind of see the market is a little bit overextended now. And obviously with the buys, we wanted to see buys come in from, for example, around this area here. So this was around my target for the trade. I think 29935 was the exact target I had for the major target on the trade. And what we'd seen was open imbalance, small demand, open imbalance, and now the market was actually starting to roll over. So it was this rollover that actually brought me my trades, because I could see here exhaustion. I class this as exhaustion. Basically what that means is after we have a large extended move, the market is going to start losing momentum and then make some pullback before moving away. So it's extended, and I am bullish on the pair at this moment, but when we start to see this exhaustion, that is what then gives me the idea that, okay, maybe we could look for some sells intraday just to take down towards our buy zone. So another example of the exhaustion would be here, for example. We have a big bullish push up, then we start to see momentum slow down. This is where you could then take a counter sell towards this demand, for example. So all I was looking for was counter to the larger move, a selling idea to bring us down towards this demand just here. Now, obviously, I'm not just going to sell wildly into this, but when we did get this break of structure, this is what actually gave me the confidence to start entering some sell trades. So at this point, we hadn't got a little break of this structure just here. And basically what this showed me was the exhaustion was now rolling in. And what I decided to do was place a sell limit. And my sell limit went in from the high. So my sell limit was actually in this zone just here. Now on my funded account broker, this was just about inefficient. You can see that the zone here is, I think, very slightly retested. But obviously this for me is not really going to class as a mitigation or fulfillment of a zone. I like to see the deeper pulls into the zones. So I'd seen this breaker structure. My sell then came in manually when we got into this zone. So I got a better entry than I usually would on this trade. Usually I'm going to be looking at, entering up the low of the zone, but because I entered manually, I managed to get a slightly better entry. And my trade looks something like this. And my target was there. So we got tagged in on the trade, sold that within that supply zone. Then it rolled over nicely. Pretty quickly, we got a new lower low that gave me intense confidence in the trade, and this is exactly what I wanted to see. And then from there, we did trade down quite nicely into this demand zone just here. Now, if you remember what we said at the start of the video, I did actually close this early, if you remember what we showed. And I closed this for around 3.7R, which was in and around this demand zone. So the market came down, messed around in this demand a little bit, and when I started to see once again this exhaustion coming in where the market's slowing down, it was around this point that I actually decided to get out of the position. Now fortunately I did, because we then pulled all the way back up, and from there I got my 3.7R, and I thought, okay, well, we've reacted from this demand, but we've still got this imbalance and we still have this open demand below. So I'm not really trusting this one for a full-blown reversal yet, and I would actually like to sell once again. So I looked for a sell from this supply just here. My stop was just over this high, I believe, and then the target was going to be down into here. So this one was only looking to be around a 3-point-something R position. Not a huge trade, but definitely one still worth taking. And we filled the first one in, so at this point I'm essentially risk-free. The worst case scenario for me is I can be up 2.7R for the day. The best case scenario is I can be up around 6 or 7R for the day. The price traded into our supply. We got tagged in on the position. We pushed quite a bit further than I'd have liked to have seen, as you can see here. Came quite close to the stop and then started to sell off. So I still held this position, nothing had really changed. At this point it was looking good, but it was at this point then we were leading very close up to the NFP. We had about 30-40 minutes left until the NFP. So I decided, okay, I'm going to leave it for now, but I will be monitoring closely, because if we do start to push back up, I probably want to be getting out break even. Now when the market then pushed back up, I was fine with it at this point, but it was when it broke this high that I was a little bit uncertain. So when the market came down to this level here, as you just saw, I got out of that for break even, and I think it did sell off quite a nice bit, but then it actually did end up going to the upside when the NFP came out. Just prior to the NFP release, it did push through the highs. So this trade I ended up locking up a 3.73R profit, and then the other trade I ended up locking up nothing, around 0.1R. So this is essentially a break even. And that was the trading of the day on US30. Now, as you can see, it's very simple. There's no crazy technical wizardry going into this. It's simply following the kind of flow of the market, following the exhaustion, trading through imbalances, and trading into supply and demand zones. By doing those things, I managed to bag this little US30 trade in the morning, and then I went for a second shot, which could have worked out nicely, but in this instance, I just got out break even and let that go. So the key from this video is me just showing you that you don't have to go crazy on the technicals. You don't have to be going for huge risk reward trades. You can just trade what you see, trade what the market provides you. If the market is giving you, for example, this exhaustion, and you can see that price is likely to lead into a demand zone, why not sell it down, right? If you can get 3, 4, 5R out of that trade, that is essentially all the profit you're going to need for the entire week. Now, if you're trying to pass funding challenges, let's say your target is 8%, you only need to do 2R a week. So you could do this trade, and then you could not trade for the next 2 weeks, and you'd still be fine on getting that challenge done, okay? People get focused on this high frequency trading. You don't have to be doing that. You can actually just focus on taking high quality setups when they're there, and you don't need to be chasing these massive winners all the time, okay? So very simple analysis. I just wanted to share this with you because I want to give you the realistic outlook on how you need to trade, or all that you need to do to succeed in trading. You don't need to go crazy. You don't need to be going for 1 to 10, 1 to 20 hour setups all the time. You don't need to be trying to, pull this stop down to this point here, for example, which sometimes is going to work, but sometimes is going to lead to you getting stopped out. You can forget the glamour, essentially. You can just focus on what the market is giving you at the time, and just focus on you and your system. Don't try and be the best trader in the world. Just do what works, because essentially that's all you need to do to get paid, and that is why we're all trading. So the other pointer I wanted to talk about was the importance of understanding economic news releases. NFP is not something I ever trade. When it comes to the NFP or any other major news release like that, CPI data, I'm probably going to be getting out of the market 9 times out of 10, or well, 10 times out of 10 really. Being aware of that actually stopped me from taking these losses. Now, I think this drive up was NFP driven, sentiment leading into the NFP. And then if you look a little bit longer, when the NFP came out, we had a huge drop off. So if I wasn't aware of the NFP coming up, I would have taken this trade, first of all, winner, but then I would have taken the loss here because I wouldn't have been looking to get out before this happened. And then as well as that, I also would have taken a loss on a buy limit that I had set at this level. Now, I removed that buy limit prior to the NFP because that's the safe thing to do, and I got out of this trade prior to the NFP at break even because that is the safe thing to do. Had I not known about that, I'd have made 3.7R here, but then I'd have lost 1R here and 1R here, so I'd only be up 1.7R. Still profitable, but obviously it can easily be avoided, and I made over double the profit that I would have made simply by being in the know about when news is happening and how much of a bad effect it can have on the positions that I'm holding in the markets. So that is all for today's video. I hope it's benefited you in some way. I just wanted to kind of show you my thought process with the US30, how I kind of intraday trade with the US30 as well as different assets. That's kind of what I do. I'm just following the flow of the market and using the technical things to my advantage, mainly focusing on structure, supply and demand, and liquidity, as well as thinking about things like momentum and exhaustion or relief. That's the kind of thing that gave us the idea for this trade. As well as that, keep in the know about news releases, definitely something worth looking at. Next week, I'm going to be back with some more substantial YouTube videos. I'm actually upping the YouTube to 3 a week now, which is going to do analysis, we're going to do some psychology talks, and we're going to do some technical talks. I'm just going to find a camera so that I can get higher prediction videos, and then we'll be on the roll with that. So thank you for your patience while I've been away. I'm back now, back in the action, and I'm looking forward to sharing more videos with you and helping you progress on your journey. So if you do want to join my training academy, I have a sale that finishes tomorrow. That is definitely worth doing, so head over to the link in the description for that. And don't forget to join my free course regardless of that. That's totally free, mini course going to show you why you're not winning and how you can turn your results around. So there's a lot of value everywhere for you. And if you want to see more tutorial videos, case studies, all of this stuff, head over to my YouTube channel. So thanks for watching, and I'll see you in the next video.